All right. What's going on out there, traders? Another one here for the Dark Side family, and a lot more of the same thing: patience, structure, and the P word, probability. Probability is, I mean, that's something that I talk about with my team all the time, and I think it's just, I don't know, it's like it's left out of trading for some reason. I just don't get it. But I'm going to try to touch on that right now and how I think you could start to incorporate that into your own analysis. And again, you know how it is. I don't care what you trade, smart money, retail, order blocks, supply and demand, Fibonacci, it doesn't matter. Trend line, it doesn't matter. It's all about the probability of what's probably going to happen and what's probably not going to happen. And just like everything else in life, probability is the whole point in your decision making. It's got to make sense to do something before you do it. And trading should be no different. Just because your rules are met, let's say, and X, Y, and Z all add up, and now your rules are met and you're supposed to enter the market, doesn't mean you should enter the market if probability is not on your side. I mean, that's the entire point of inducement and traps, because it's going to let you see everything that you want to see, okay, and then it's going to come and not do what it's supposed to do. So you followed your rules, but the probability wasn't in your favor, and that's why price taps you in and taps you out. So again, I don't like to say it really, but get away from the rules. Learn how to flow with the market, and it'll just help you out. It'll put you in more trades, and it'll keep you out of less trades that aren't going to work out anyway. So anyway, let me get back to this. So we're looking at NU. Obvious here, ascending structure. We'll go ahead and mark that out here. Higher highs, higher lows, higher highs. The most recent higher high brought in right here, as we can see right here. Now, some people would call this a liquidity sweep. They would say that, liquidity's been swept right here. This is done. Price should now sell off. That's not the case, but that's everybody's got their own way to look at the market. That's fine. What I am going to focus on though right now is the order blocks and imbalances. So if you're an order block trader, you're waiting for 50% of this area to get hit right here. That would be your order block. It's the last sell before the buy that led to the BOS. So that would be your order block, which you would wait and anticipate price to come into and get long from, making a new higher high. 50% is how they trade. This is 4-hour time frame. If we go down the time frame into 1 hour, we'll see that there really isn't an order block on the 1 hour. And that's the other thing, guys, when you think about it, like a 4-hour is an order block on the 1 hour it's not, on the 30-minute it is, the 15-minute it's not. They say to refine. You could do that, but at this point, if you've been trading them long enough and you see what's going on, you know it ain't working no more. But whatever. We're looking at a 1 hour imbalance here. That's the other popular way to enter the market, would be through imbalances. And I like imbalances. I like order blocks too, and I like structure. So when we have everything lining up, like structural swing points, along with order blocks, imbalances, and things like that, that increases the probability of price moving in our intended direction. So right there, the confidence starts building alone, and then comes the patience. That's the hard part, because it's so easy to get into the market. All you have to do is push a button on your phone or click a thing on your computer, and you're in. If you would have stopped and if it was a 30-minute process, or if it was a contract you had to fill out like the old days, or if it was actually something more that you had to do before you got into a trade, your trade winning rate would increase significantly, because you would simply be a lot more patient in what you decide to do. It wouldn't be that easy to just click the button. Instead, you'd say, all right, let me really think about this, because I don't feel like going through all this contract that I got to fill out in order to get in this position. Is it really worth it? And it would help you become a better trader. That in itself alone would help you. So don't let the patient or the convenience of trading be a burden on you, because it is to a lot of people. The fact that you can just push a button on your phone in 2 seconds to take a trade anywhere in the world, that's actually not a good thing. That actually leads to overexposure, and ultimately, you know what happens when you're overexposed? You get your head ripped off. Again, back to this scenario here. So we've got our 1 hour imbalance. Okay, we've got our 1 hour, or I'm sorry, it was the 4 hour, 50% of the 4-hour order block. Again, two high probability smart money concept scenarios where they look to get long. We're going to watch price fall into it. And if you look even here, before price has even reached the 1 hour imbalance, which is so funny, what are you already getting? You're already getting traps setting up. I mean, look how obvious it is. You can see the fake break of structure right here to the upside. This is the fake BOS, right? And then this would be your order block or your imbalance to get into. And let's just clear that out real quick, just so we can see exactly how they did it there. And if we look on the 15-minute time frame, you can even see the imbalance or the order block that they're going to use to trap you with. So let's just highlight this real quick, let it play out. And you know how to avoid this, guys? By just being freaking patient. Your 1 hour zone has not been hit. Your 4 hour has not been hit. Just because it shows sign of upside doesn't mean anything. You got to be patient, or you're doing yourself a disservice. So let's just watch price play out. Yeah, big break to the upside. BS. You can see how obvious it is. It makes it look great. This and that. Ascending order flow to the upside, and then it drives straight through. And where does it go? It went right where you thought it was supposed to go. So you would have took an L because you couldn't wait. But again, that's just patience. Okay. Let's let price gather in here for a little bit, and then we'll go ahead and decipher exactly what takes place. Now, as you can see, I think that was the final tap in right there where price is just going to leave. And then it goes down to the same things we talked about before, guys. The same entry criteria. Let's just back it up a bit. The same entry criteria as in all our previous videos. We're waiting for the zone to get hit. Once price gets hit, we're waiting for the BOS. So let's go down to the low time frame, all right? We've got descending structure. Looks good. Our zone, we know the manipulation's taken place already. Our zone gets hit. Price comes up and breaks structure right here with the new higher high. Doesn't do it by much, but it does. So let's just make sure we can illustrate that nice and clear for everyone. Right there would be the last structural high. Now, it doesn't take much to break structure, but when it's broke, it's broke. So if we look nice and close here, we can see that certainly this lower high, or a lower low, lower high, lower low, this led to the break of structure. It's just by a couple pips, but that's all it takes. That we're not worried about that. That's what it takes. We don't make the rules. That's what it is. Okay, so we've got our BOS, and like I've showed you many times before, once we have our BOS in the market, we're looking for an area to get filled, an imbalance or something like that to try to get long. Okay, but again, this is where probability is going to come into play, because not every single time is price, and this is a good example that I wanted to show you guys. If this is the 1 minute imbalance right here, okay, this is the 1 minute imbalance. Let's see if there's any on the 2 minute. Oh, look at that perfect, clean 2 minute imbalance right there. Perfectly clean. Okay. Now, if we were to trade this 2 minute imbalance, because obviously everybody's trying to turn a $100 account into a $10,000 account overnight, when you do that, you start taking probability out of your favor. Okay. Because the case is that you've seen everything you wanted to see. Okay. You've got the 1 hour imbalance filled. You've got ascending price action where you're expecting a higher high, where you're anticipating a higher high in the market, okay? So you've got everything. Price is now in your zone. All you want to do is get long. So when you start doing things like this, okay, like worrying about, getting a 1 to 100 or a 1 to 50 or this and that so you can tell your friends and show the screenshot, it's so unproductive. It makes no sense because you're taking probability out of your favor. The realistic scenario is the high probability is that price is going to move to the upside. The low probability scenario is that price is going to fill this exact imbalance perfectly and give you a perfect trade every time. That is more likely, the perfect entry is more likely not to happen than the area you think price is going to go to happen. If that makes sense. So in other words, if it's a 90% chance that price should probably fill into this area where you're thinking, and then it's maybe a 5% chance that you get a perfect break of structure, perfect 1 minute imbalance fill, perfect 2 pip stop loss. That's 5%. Maybe that might even be a 2% chance. So think about your odds right there on the probability. What are you doing to yourself? You're taking yourself out of the game before you're even involved. Stick with what makes sense. Stick with the high probability scenario. So in other words, forget about trying to get into the market so accurately that it's a 1% chance it's going to happen, and focus on just getting in the market and making sure that you can go towards the 90% opportunity, which is price going into your intended direction. Okay, so that's what I mean by probability. Sure, these scenarios are going to happen where price is going to tap right in and fly. Just look at our previous YouTube videos. They happen all the time. But let me tell you the honest truth. Very rarely am I waiting for this stuff to happen because it just doesn't happen often enough. I'm not saying that it doesn't happen, but it doesn't happen often enough. And I'm perfectly happy making a 1 to 5, 1 to 4, 1 to 6, whatever a case may be when you're trading a large account, comparing to need a 1 to 20 and getting tapped out 90% of the time because it never really happens that way. So again, let's just watch this one play out. So we have the 2 minute there. All right. If you were waiting for it, I already know what's going to happen here. You would have missed out, and price would have left without you. But again, that's you're over refining. You're doing too much. If you go up a couple time frames, the 3 minute you can see, and this would have said, oh man, this is definitely a clean imbalance. It's on the 3 minute. It's very clear on the 2 minute. It's also within the 1 minute. There's a 1 minute imbalance. There's a 2 minute, a 3 minute. Let's see the 4 minute. 4 minute, the imbalance starts to get a little bit larger, and you see what's happening here, guys. And then you've got your 5 minute as well. And ultimately, the 5 minute imbalance is what price taps into. Okay, so the lesson in this video is it's not bad to refine your order area down here, your entry area. I mean, it's not bad to try to refine this into a 2 minute or a 1 minute. But I mean, look, what you're trying to do is you're trying to get a 2 pip stop, and you're trying to make a 1 to 50, and it's just not that, it's not worth it. It's not worth it, because this trade alone is a great opportunity where you would have missed out. And if you would have just been trading the 5 minute zone, and who cares if you have a slightly bigger stop loss, what your stop loss would have now been. And I never say to keep your stop here. I always say to make it larger. So let's just say you would have a clean 9 pip stop loss, all right, which is still beautiful, significant. If you were looking at the 2 minute and that other imbalance down here, and price, let's let price run for a little bit, you'll see that you just let it start to take off, right? You'll start to see that there was no point in doing that, because you would have been left out of this move the entire way, because you would have been waiting for your 1 to 100 and your 50% gain per day bullshit, and this would have been the result. And let's just let this run for a little while and back up the chart to where we are, and look at the trade you would have missed out on. Okay, look at the trade. Look at the trade right here that you would have missed out on. This is crazy, actually. But look at what you would have done to yourself, doing yourself this disservice. You would have missed out on this entire move to the upside, okay? Over, let's see. You may remember, this was the goal. The goal was a new higher high. Okay, so let's just get back just to clarify that real quick. The goal was a new higher high, higher low, higher high. So take profit could have been anywhere up in here, and anything higher would have been great. That was the goal, the higher high. So you would have missed out on this entire move because you were trying to be too cute and over refined, and you would have missed your 2 minute imbalance instead of just trading the 5. You see, instead of just trading the 5 because you wanted the tighter stop. And again, guys, this tight stop loss nonsense that's taking place, it's making brokers rich. It's making prop firms pop up left and right, because all you guys are doing is killing yourself and losing, because you're taking the side of probability out of your hand. That's the only thing we have in the market is probability. That's all we can do is increase our odds. So let me ask you, why are we decreasing our odds instead of increasing our odds? Okay, why are we decreasing our odds with tiny stops instead of increasing our odds? You understand? When you decrease your stop, you know what you do? You increase your stress and you increase your loss rate. When you increase your stops and give yourself a bigger stop or loss, you know what you do? You now decrease your stress, you decrease your losses, because you're giving yourself more. You're giving yourself a better chance of things playing out in your favor. Okay, listen to that again. All right, please listen to that again. When you're looking at something, okay, and price comes into your zone, and you're looking to get in, and you want to get in perfectly, okay, what you're doing is you're decreasing the probability of the scenario playing out in your favor. Imagine this is your odds right here of things going right. This is your odds right here. You have 4 pips worth of odds going in your favor to make 13. Okay, when you make this smaller, this is your chances of things going right. So you have less and less and less and less chance of things going right when you do it that way. When you increase your stop, you know what happens? You have more of a chance of things going right your way. It doesn't mean that you don't have proper market IQ. It means that you're giving yourself a better opportunity to get into the market. Okay, when you get into price up here, you're increasing. Yes, you're increasing your stop. It's bigger, but you're also increasing the probability of you getting into a trade, because it doesn't have to hit this. It doesn't have to, and if it does hit it, it doesn't have to stop right there. It can do this, and it can still fly. So why do this to yourself? Why would you do this? Why do that? You're exposing yourself to unnecessary harm. You might miss the move, and you might get tapped out of the move. Okay, use probability in your favor, guys. Increase your stop, increase your win rate, decrease your stress level. I mean, I tell my guys this all the time. It don't matter what style you trade. If you trade 61.8 bearish engulfings, you know how to increase your chances? Wait for that bearish engulfing to print, and then wait a little longer. Just wait. Give yourself some time, give yourself some patience, wait for it to happen, and then once price starts moving in your direction, get in the market. Because if price is going to reject anyway, if it's going to reject your 61.8 and go this way anyway, it doesn't matter if you get in right here, or if you get in right here, or if you get in right here. If price is going to go your way and make a new lower low, that's what it's going to do. It's going to do that either way. If it's going to come down this way and make a new lower low, it's going to do that anyway. So why are you decreasing the probability of your chances to get in the trade by gambling right there instead of waiting right here and getting in right here or something like that? Everybody thinks that, if they don't get in right here, that they missed the move. You didn't miss the move. The move is now confirmed. Once you get in down here, the move is confirmed. Who cares if your stop is a little bit bigger? Because the probability is now in your favor of price not hitting your stop but going in your intended direction. You see? So again, guys, I don't know. It feels like people don't talk about this stuff enough. And I think these simple things could change your trading because, again, it don't matter what strategy you trade, smart money, retail, supply and demand, whatever the hell else is trending right now. It doesn't matter if you're not being patient, if you're not working with probability in your favor. And again, this was just a simple play. Let's let it play out a little bit more. You could see it was a crazy play, crazy rocket, man. And again, there was nothing more to it, guys, and the same thing I talk about. Structure, patience. Structure, patience, structure, patience. How do we get in? Very simple. We'll look again, just real quick. Price tapped into this 1 hour area. And if you were a smart money order block guy, remember the 4 hour that we spoke about before? This 4 hour bearish engulfing candle that led to the break of structure. 50% of that, again, you would have been left out of the market because this is the smart money 50% line and it never got hit. The order block never got hit. You would have left out of the market. The 1 hour, however, this 1 hour imbalance was filled. Okay, once price tapped into there, what did price do? Let's just back it up one more time to keep it nice and clear. Oops, go right back to here. You were patient. We saw the smart money trap happen the first time where they thought they were in the market right here because they saw the BOS, the break of structure, the fake into this area. They saw the BOS. What did price do? Nope, it took them out. Again, all you had to do is be patient. You would have avoided that. And when we look on the low time frame, we could see exactly what happened. We finally had our BOS in our zone. Price came in. You could be looking to get long from this area. What do? We don't do this because this decreases the chance of price actually playing out in our favor because we're decreasing our stop zone and also decreasing our area for making a mistake. We don't need to be like that. We should be more proficient and be okay. If price goes maybe a little short, a little after the area, whatever. Either way, once you do this, you increase your stop a little bit, give yourself a higher probability of it playing in your favor. Price taps in, and the rest is history. All right, guys. So again, this video, the whole goal in it, again, is not to say, to trade any specific way or to trade my way. All I want you to do is look left. Every answer to any one of your questions is to the left of your chart. I know I don't have to even wonder or guess. I know for 100% fact that this has happened to you all the time because it's happened to me so many times. Okay, so stop worrying about refining, and trying to get the perfect entry and the perfect stop because you're just harming yourself. All right, get your ass in the market, give yourself a chance at it by increasing your stop. Okay, and just get it busy, man. The good thing about once you're in a market, and even if you are a little early or a little late, when it comes time to hedge the market, when you get your long, and now you're long, even if you didn't get in here, but you got in right here. Now when it comes time to sell and to hedge, now you've got a free hedge because you've got money in the bank. You can close a portion and trade for free to the downside. So figure out a way to get in the market, guys. I hope this video, again, I hope that you found some use in it here, some value in it. Leave us a like, leave us a comment, and make sure you're following our Telegram. April boot camp just wrapped up, but we might hold another one in March or April. We'll see what happens. But either way, appreciate it, you guys, and we'll talk soon. Thanks.